everyone. It's another great spring episode of More Than a Mortgage, and I'm here live with my one and only Tom. Say hi to everybody.
How are you, everybody? Welcome to the spring market. We're knee deep, ready to go.
Knee deep, sleeves rolled up. This is how we do it in the spring market, and we are just thrilled to be here on another one of our episodes today. And for those of you out there listening, I just want to get it out there. We are on social media. I'd love for you guys to follow us. We've got a lot of good content coming, and a lot of good content you can go back and listen to. But you can find us on social media at More Than a Mortgage Pod on Instagram, just More Than a Mortgage on YouTube, and More Than a Mortgage Mike and Tom on Spotify right now. So it's a pleasure to have the opportunity to be here with everyone today. And Tom and I got to bring it up just because this was our night last night. We're in a boxing match, not literally, but it felt like it, on a multiple offer.
Imagine that, multiple offers in this market.
And we're both on it, fighting against each other. So Tom had a client, I had a client that was competing against it, and lo and behold, we woke up this morning and
neither of us won.
If you don't finish first, you finish last.
That's right.
And so, I don't know what we lost to. I think we have a pretty good idea, but, what we did, I think both of us did, like without even knowing that we were in this battle together until we got out of the gym together last night and talked through it and said, wait a minute, are you on that deal? His best and final already submitted, but what ended up happening is we lost to first place, and I think they were like, they had to be like 20% at least over list prices.
Oh, 100%.
List price was $900, just for everyone out there listening, and they were
33%,
well over $1 million on it. And so I think what we're commonly seeing right now in today's market is at least 10 to 15%, depending on what you're offering on. You got low-rise condos, single-family residence, mid-rise condos, all of that, anything in the suburbs, 10 to 15 in some cases, like we saw last night, 20% over list price.
And multiple people doing that. It's gotten to the point here, and again, it's no surprise. There's just a lack of inventory, and I think we've talked about it over the course of the last number of weeks and episodes. It's just crazy. And the reality is the people sitting on the sidelines, which I think we're going to talk about a little bit today. It's tough to see because it's continuing to drive prices up, and it's really interesting just to see what a market does and how it reacts.
And we've gone through and talked about just what you got to do to win. And I think I would imagine your side, because we don't talk about these things. Tom and I, this is not the first time we've been in multiple offers against each other, so it's a little weird. It's a little weird because we're both super competitive, so we don't really like what'd you do? And we won't tell each other. It's like, what'd you go up to? And rightfully so, because we protect our clients and what their positions look like on all this. But neither one of us, both went home last night not knowing what the other one offered and not knowing if one of us is going to take the cake. But at the end of the day, neither one of us won. But guys, listen, we've talked about it in previous episodes, what you have to do to win, what you have to do to be competitive, a combination of all that. It's if you're going to compete in this market, like the spring market, what I love about the spring market is it's a market where you see the most come on.
Yes.
You get into the fall and the winter and you don't see as much come on, so you're like, God, there's just not a lot out there. But the spring market, you actually see things coming on, but you just have to be prepared to move fast. And so, I've talked to a few clients this week, and people are still, I think, nervous. I'm nervous about just the way the market is right now, but more it's like rates haven't come down to where everybody was thinking they were going to come down. There was a minute there we touched into that 5 range, and I don't know about you, but I think our office, I could hear it outside the doors. We're all like, whoa, 5s, here we come. And it was just we saw that moment of excitement, and we saw what is going to happen when someday. We've been saying this for 3 years, but 4 years, but what's going to happen when that day comes. And we got a lot of things happening around us right now. We got a new Fed chairman being sworn in here hopefully soon. We've got this whole Iran thing calming down, maybe. We'll see how that all plays out. But there's a lot of like global economical things that are going on right now that I think are going to start making more sense in terms of like future rate cuts and things like that. And job market's still got some, it's tight.
Yeah, but I think that goes back a couple episodes ago. We had a guest on there, and he mentioned, those that are waiting for these rates to come down, all that's going to do is put more fuel on the fire.
Yeah.
And when we talk about where rates are right now and what the current market is, and the fact that we're going 30% above a list price in order to win it,
in the middle of multiple,
in the middle of all this, while rates are still high. Can you imagine what it would be if it was 5.5% rates or somewhere in the fives?
Yeah, like, I mean, your 10 to 15 offers that you're seeing would be like 15 to 30 all day consistently. And so, and another thing we'll take from our guest that week is that, guys, look, buy now, refi later. Like, it should be your mindset. Like he said it when he was on our show. He said, if I'm buying a house right now, I want rates to be as high as they can possibly be. 8.5% would be phenomenal.
Well, and again, it goes into being able to then limit the competition, because there are people that are afraid or aren't necessarily comfortable purchasing, one, at these interest rates, or two, at these price points that are on the sidelines. So it's eliminating the competition, but then they get in. And the reality is unfortunately, the Fed chairman, any of these global things are not going to impact supply. Supply is what supply is, and unfortunately, it's an economic side of things where it's supply demand, and the demand far outweighs the supply. And just to be clear, that's for the most part just here in Chicago. A lot of other areas this is not being experienced. But what that means is you get in, and so refinancing. I don't know. I mean, we've talked a little bit about it way back, but how do you know when a good time to refinance is, and what does it mean? What are you doing when you refinance?
Yeah, the whole buy now, refinance later. It's like, what is that? Buy now, pay later. It's the same thing. It's like, get in your place now. Like if you buy today, and you just heard what we just told you at the beginning of the show today, is that you're gonna have today's prices at tomorrow's rates, right? You're still gonna pay higher. It still might wash any rate drop that you might get out of the picture because you're paying a much higher price. My mindset works like this: get in now. Next spring, when this all rolls around and cycles through, you're gonna be sitting on some good equity. And Chicago there is not a bust, guys. Like there's too much equity in homes. There's too much credit-worthy buyers out there. There's not. If you're waiting for a bust or you're waiting for rates to drop, stop doing that. Like, this show is really all built around how to build wealth in real estate. And, we're very passionate about that because we've seen what it's done for us and what it's done for a lot of our country in terms of the average, household having their net worth built around their home. The goal with all this is to get in when times are rougher. That's where I've always made the most money in real estate, when times are tougher, and, take care of your financial, as long as you can stomach the payment and you can still save, and you're not maxing yourself to the rim, which we're very passionate about making sure you don't do, you should feel good about making a purchase even in the tough times, because you can refinance later. And so to answer your question, when does it make sense to refinance? Well, they tell you that, like, a lot of people have the misconception that they're going to pay all these closing costs on the purchase and it's going to cost that much to refinance. Mm-hmm. And it doesn't. The reality of it is when you purchase a home in Chicago, your closing costs on the purchase side could run anywhere from 2 to 5%, depending on what your purchase price is. When you go to refinance, you're literally looking at, in most cases, like $1,000 to $3,000, depending on what situation we're in. Like our company, for example, has a special that they're running for refinances right now, where if you have your mortgage with us already, which is cross country, you don't have lender fees or title fees that you have to pay. There's a streamlined refinance that you would go through. So in that instance, the littlest tweak on your interest rate, like if you went from a 6.875 to a 6.375, you're saving a lot faster.
And I think the other thing that comes into play here, and this is where I think you were going down the line with respect to what traditional, at least what I hear, a lot of people are like, so in order for me to refinance, it only makes sense if I save 1% on the interest rate, or, insert a number there. The reality is everybody's situation is different.
Yes.
And I think it really depends on you from a personal perspective, because first and foremost, if you have a $100,000 loan and you save 1%, the savings are going to be there, but not anywhere near as if you save 0.5% on $1 million loan.
Yeah.
And so first and foremost, understanding it depends on the size of the loan. Secondarily, certain things influence others. So for you, $100 a month in terms of savings might move the needle. And as a result, it's something you may want to pursue, especially if they're very limited and low costs.
Yeah.
And you do a break even, which we'll get into here in a second. For others, they may not want to go through the hassle because it is a new loan. You do need to gather income documents and assets, and maybe it's $300 or $400 that's going to move the needle. And so really understanding for you what makes sense to you to go through that process and is material for you.
Yeah, absolutely. So and then the flip side of it too is like, how long are you going to be in the home for? Like,
sure,
because there's some people that are like, hey, this is a 7 to 10 year play. I am tired of getting my mortgage statement sent to me and I barely pay any principal off in this 30-year amortization. Like, where do you want to be in 7 to 10 years? Is your goal to have more cash flow to play with in the markets, or to pay off some debt? Or is your goal to actually have more equity in your home when you go to sell in that 7 to 10 year period, so that you're actually building wealth through the amortization gain? So that's something that we look at for you. So what Tom was just saying is that every situation is going to look different. You got to have a conversation around the overall structure, like what makes sense for you, what the goals look like, long term and short term. So let's talk about that break even and what that means to everybody. So, and whenever you're doing, when you go through, you get your house, you finally start making your payments, and then the thing I love about our company is that we have actual software set up to notify us when you're ripe for a refinance. Like, that's huge, because at the end of the day, you don't have to worry about it. You will get a call from us, and hopefully a lot of companies have this set up for their clients, but you will get a call from us when you're eligible. And what that looks like for us is when the break even on your savings to your cost makes the most sense. Now, I think the general rule of thumb, if you go through what the industry tells you should be looking at on a refinance, is about 12 to 18 months on a break even. Okay.
What does that mean though? When you say a break even?
So let's just say you're doing a refinance and you're saving $300 a month. I'll just use that as just an easy rough number. And your closing costs, let's say, were $3,000. You take your closing costs, $3,000 divided by 300, and savings, and that tells you that your break even is 10 months. Great. That would be a scenario we would look at and say, this is a very good setup for you. This is right in that target zone that we want you in to make sense of a refinance. And one of the things I'll say about it is you got to be really careful, because we just missed a big slew of clients on refinancing because the greed set in. They didn't want to do anything. This was 2 months ago, by the way. They didn't want to do anything until they got into the 5s. So think about that for a second. I had one client in particular that we would have saved in the low 6s if he would have moved forward on it. I would have saved him about $600 a month. So his break even was 5 months. He didn't want to do anything until he got in the 5s. So he's already $1,200 worse
than he was.
Because he waited. And what happened? Bombings took place in Iran. Oil prices shot up. Rates went up almost to 7% again. And so there's got to be some common sense around this stuff too. And there's got to be the mindset that, hey, when my target's there, I'm taking my chips off the table.
Absolutely. And I think it's similar like buying stocks. It's a buy and hold. It's similarly like if you can get to a point where it makes sense, at least financially, it's almost like, okay, buy. And then you could buy again. And then you could buy again. But don't necessarily try and time the market and wait. And again, it goes back to what we've talked about. It's all about rate. It's not all about rate. I think it comes into play. You have to look at the big picture, because another story that we saw where there are a lot of clients that were out there, and because it was all about rate, yes, they got in the 5s, but their costs were $10,000 plus to get them there.
Yeah.
Their break even was probably more in line
4
with
years.
6 years,
4 to 6
4
years.
years,
Yeah.
Which, if we are in a decreasing interest rate market, personally, I don't think that makes sense, because we're going to see a point where the rates are going to get down. To pay that amount of money in order to decrease the rate, it just takes too long.
That's a really good point. Let's touch on that for a second. Like, guys, I want you to understand something. Like, I've been doing this. Tom and I both have been doing this for 23 plus years, and there's this whole thing back when the market crashed called Dodd-Frank, where it was supposed to kind of weed out like the predatory lending. Predatory lending right now is I think the worst I've seen it.
I would agree.
Since I've been in the business. And what do I mean by that? I mean, you legitimately are getting phone calls from your servicers. Like, some of you that have Rocket as your servicer know what I'm talking about. You legitimately are getting calls constantly from that Rocket person, constantly trying to get, if someone's forcing you to refinance, you should run to the hills, because that is not how this goes. And what they're doing is they're calling you and they're saying, hey, we're going to refinance you. We're going to get you at 5.5%. You don't have any closing cost to pay. We're going to roll it onto your loan amount.
I don't even know if they say they're going to roll it into the loan amount.
They don't even say they're going to roll in the loan amount. You just have no closing cost to pay. It's very deceiving when they say that. And then they'll call me and say, hey, can you guys get down in the mid fives? And I'll say, can I see your loan estimate on what you got?
The first conversation is, well, that's not really where the market is.
Yeah, exactly.
And then they'll say, well, that's what we were offered.
And I'm like, can I see your loan estimate? And when I see their loan estimate, they're paying 3 points.
3 points means 3% of whatever the loan amount is. So a $500,000 loan, that's $15,000 in order to get to that interest rate.
I actually had a client that refinanced. It was a $150,000 loan, and his closing costs were $18,000. He went with the servicer, and that was predatory lending at its finest. That's not where you want to be at. I ran the numbers and the calculations for him. His break even was 5.5 years. He's not even going to own the place for 5.5 years. And it made me sick to my stomach. So I'm like, listen, you got to trust the person on the other side, because some of these people out there are just trying to get a paycheck.
You got to look at the big picture, everything. What's your plan? How long are you going to be in the property? What's the total cost, and what are the savings? And put that all together. It's not just the interest rate. And we say that when purchasing, but it's really true when refinancing. It's same all the time.
Yeah. So just know, buy now, refi later. Now, a couple other things that we're seeing a lot of right now are, people have a lot of equity in their houses right now. They're looking at, how do I tap my equity? How do I take some money out? Again, it's taking chips off the table, but I want, I've had a 30-40% increase in my value of my home since 2020. I want to get some of that. I want to go buy another property. I want to remodel my house. I want to pay off some debt. I got kids in school. I want to pay for my kids in school. How do I do that? That's a different refinance, but it makes a lot of sense. And it's called a cash out. It's where you're taking cash out of the property and cashing out some of your equity. We're doing a lot of those right now. Look, if you're in the twos, don't be afraid to talk through a cash out with us, because we're never going to just refinance your 2.875% mortgage. We're going to look at the big picture. We're a good loan officer. If you have a good loan officer, it's like having a good attorney. It's like having a good CPA. You just need to lean on them, because they're going to give you the best advice. I would never, and sometimes I have, but because it made more sense. But if it doesn't make sense, there's other vehicles we can put in place. There's home equity lines of credits. There's ways that we can get around not having to pay that 2.875% rate off if you don't want to. It's called a blended rate. We run a blended rate on it to see how that shakes out, and whether a blended rate makes sense for you right now, or depending on the amount of cash out you need, it might make sense just to put it all into one loan and do it at a 30 or 15 or 20.
I think it goes back to, again, what we've started with, and and I don't mean to say preach, but preach is, that is one, having a trusted advisor, and two, knowing all your options. And I think the option side of things is, we talk about it from a purchase perspective, but it's just as much in the refinance realm as well, because do we take cash out? Do we do a home equity line of credit? What is the purpose of this? Is it to invest? Is it to buy more? Is it to pay off debt at 25%? What is the purpose and what are the reasons behind it? And really having an understanding of what this means, if this, then that, and taking into account the costs as well as the break even and everything along with it is key.
There's a lot of questions around this, and I'm glad we're talking about it today, because just in the last couple of weeks, with the market up, the market back down, the market coming down, the market going back up, there's so much uncertainty about where we're going to land at the end of the day. But having these conversations, if you're a buyer in this market right now, I can't stress to you enough, I don't think inventory is going to get any better. I think the competition is going to continue to get worse. And I don't know, I look back on myself at buying in 2021, and I couldn't be happier.
Yeah.
To see what's going on around me right now, because I'm a seller. I'm eventually going to be another buyer in the market, but I'm a seller right now, and the sellers have the upper hand. That I think that same trend, maybe not as extreme because that was pandemic mode, but I think that same trend is going to continue to go up gradually over time in Chicago, and prices have already gone up significantly from what I can remember back when I first started getting into business. It's
absolutely, it's ridiculous.
You always hear that story, my grandparents bought a place back in 1970 and sat on it for 40 years. The thing about today's market is you don't have to sit on it for
it's
40
years.
You're 5 to 10 years, and you're seeing a good ROI, return on investment. And I think with the shortage of inventory in the city and the demand, what Jason said the other day, there's one apartment has 9 renters tied to it. So if your mindset is I just don't know if I want to buy right now, I'm just going to go rent. It ain't that easy to rent either. No. It's hard. So you gotta I think half the battle in this whole entire environment is 1, feeling good with the plan in place, 2, having a timeline set forth, 3, not waiting for the market to crash, and 4, don't wait for rates to come down. We will work those numbers out for you and look at what's best for you and your family and your payments. I just still believe in home ownership so much that I think no matter which way you slice it, I know there's some additional expenses and things that come along with it, but it sure beats the hell out of paying your landlord's mortgage down for them and getting your landlord wealthier.
And again, just kind of bringing this all full circle and together, we've kind of gone all over to a certain extent, but from a purchase perspective, if you're comfortable with the monthly obligation, if the time is right, sooner as opposed to later, like Warren Buffett said, basically buy when others are afraid, sell when others aren't, all the way through to the refinancing, which we talked about, buy now, refi later type thing with the refinance. It's both a very similar process in the sense that you need to know your options. You need to be comfortable with it, and you need to look at the big picture. It's not just rate when you purchase. It's not just rate when you sell. It's just not cost of the property when you buy, and it's not just what the value of your property is either when you refinance. It all comes into play. There's lots of different things that go into it, and it's really important to understand the full picture. And if someone isn't explaining it to you, then you need to find someone else.
And you leasing agents out there, start having a different conversation with your clients. Have you thought about buying? Because there's more in it for everyone at that point, especially your clients. Buy now,
refi later.
And look, the person that you're working with right now, make sure you trust their advice. And I'm not saying that just for us.
And they explain all the options.
They explain all the options.
It's always more than one.
And then if you are going to buy now and refi later, make sure your plan is tight. We talked about at the beginning, us in that competitive scenario, I think we had both of our clients dialed up really nicely to win. They're going to win. It's just they weren't going to win this time because it came down, I think, to price.
Yeah.
And that's going to happen. So if anyone has any questions on any of this, send us a message, DM us. We'll always get back to you. If you have questions about refinancing and doesn't make sense for you, let us know. I mean, this is right up. This is what we love about our jobs, is to give advice. Look, there's nowhere else I think you can go out there in most professions, maybe a handful of them, but when you talk to your attorney, you're on the clock usually. We're free advice.
That's right.
Use this as free advice. Use this as a resource.
Leverage.
Use this show as a resource. And don't forget to follow us. That's that's something that we're getting a lot more followers these days. Our guests that we have coming up are going to be lights out. We've got a lot of good shows and content for you guys coming up here in the spring, summer markets. Like I said, you can reach us on Instagram at More Than a Mortgage Pod. You can find us on YouTube at More Than a Mortgage. I think it's Tom and Mike and Tom. And then you can find us on Spotify as at More Than a Mortgage, Mike and Tom as well. So if you guys wanted to reach out to either one of us directly, you can go to our websites. I'm jmichaelblackgroup.com. Where are you at, Tom?
Yeah, I'm through the Cross Country website. So you can go to search Tom Merritt Cross Country, and my website will come up, and you can reach out to us through that medium. I'm more than happy to have conversations with you, at least review what options, questions you have, and make sure that you're making some informed decisions.
And so I'm Mike Black.
I'm Tom Merritt.
We are
More Than a Mortgage.